Boy, I can't spell, but that's already known. Fine, whatever. Crazy, I can't even spell, but I could trade. Ridiculous. Okay, all right, so here we go. So today what we're going to be talking about is we're going to be talking about market structure and behavior. And for this concept, what you guys need to understand is that there's 3 different types of market structures that we're going to be dealing with. We're going to be dealing with the downtrend. And let me know... actually, no, never mind. Okay. Okay, downtrend. Uptrend. And a sideways moving market. Now, what do I mean by those 3 things? What you need to do from a 9-year-old's perspective is go to the charts and figure out if... Oh, sorry. Here we go. What you need to do is you need to figure out if the chart is going like this, making new lower lows and lower highs. So we could call this right here a lower high, and we'll call this our lower low. So here, just to explain that one more time. Here's this, and here's this. And now the area that I'm talking about by lower low, what I mean by that is this area right here. Oh boy. And this area right here. The market's coming down, right? But the market doesn't just move in a straight line all the way down and then just back up. That's not how the market works. You don't just look at the look at the charts and see this every morning. You don't just see lines up and down. The market moves in waves. And this is the type of wave that the market moves in. When it's going down, you see the market go down, make lower lows. It'll come back up and exhaust. We call this an exhaustion phase. Create a lower high, and then it'll continue down because we're in a downtrend. You must understand this to begin with. From a 9-year-old's perspective, you need to look at this and say, okay, this is just going down. Whether you want to draw a trend line or I don't care what you want to do, but you just need to see that this is going down. Same thing for an uptrend. Uptrend, you're going to see it going up, exhausting, and then you're going to see it going back up. And all you need to do is be able to identify it's going up. Here we have our, in this case, it's going to be a higher low because we're in an uptrend, a higher low, and a higher high. Let me just write this out for you guys so you can see and visualize this. Oh boy. Okay. And yeah, you get what that is. Lower high, lower low. Right. Okay. So once you see these 2 moving markets, this market and this market is what you want to trade. These markets, called sideways moving markets, which are just markets that have a higher, you don't specify them as a higher high or a lower high or a lower low, because all the market does is just bounce between 2 levels. And in this case scenario, you want to stay out of the markets. You do not want to trade this. You want to trade these 2. When it's clear from a 9-year-old's perspective, I want you to look at the graphs and say, are they going up? Are they going down? Are they moving sideways? That's all you have to be able to identify. Whether the market is in a downtrend, an uptrend, or sideways. Now, going in to what you should be trading. So now we know that you should be trading only these two types of markets, downtrends and uptrends, right? You have no business trading sideways moving markets because it's less probable. You don't know what's going to happen. It's more of an advanced technique, and you'll learn more about that in the future. But for now, you stick to these two trends, down and up, because you know this is going up, which has push phases, exhaustion phases, and push phases, creating higher highs, higher lows, and this candle, once it pushes up, it's gonna do it again. It's gonna create a higher high, then a higher low, and then a higher high. It keeps on happening. These are patterns in the market that we want to be able to identify from an early stage, so that you could predict these patterns in the future. You see, this happens once, and it happens again, and then if we continue to stay in an uptrend, which we're currently in, we're gonna create another one. We're gonna create another higher high, higher low, higher high. That is just the way the market works, my friends. That is what we are looking for. And that is how you make money. Because you sure know, most traders, they see the markets pushing up. And this gets into my next point. They see the markets pushing up, right? And from the back of your head, from the back of your mind, you're like, okay, the market's going up. I'm gonna buy this market because everything's telling me that it's up. It's up, right? It's up. So I'm gonna buy this market, and I'm gonna pray for and I'm gonna pray for it to go all the way up here, right? Okay. Why is this wrong? Well, first off, you're trading it at the higher high, right? It's like all those memes you see on Instagram. Don't buy high, sell low, right? This is what you're essentially doing in this scenario. You're buying high. We know going into this trade, before you take this trade right here, right? Before you do all of this, you know now that in an uptrend, which you're buying, so we should probably in an uptrend, right? You know that the market's going to create a higher high, a higher low, and then another higher high. So if the market just created a higher low and pushed up all the way up here, why would you buy the market when you should be waiting for it to exhaust and then it create your higher low? Which then you could be confident in taking this trade, knowing that you're in an uptrend, knowing the higher high has been formed above the previous higher high, so you know the market's going up, it's trending. You take your trade up here, you put your stop loss below the higher low, and you can take it however you want, all the way up. This is how we trade. Always above the higher low. The reason we trade above the higher low is so that you know where you put this red line. This red line, what this resembles and what this resembles, if some of you guys don't know, this is our stop loss range. So what that means is if price is right here, let's say, right at the, or let's say price is right here, right? If price continues to go down here and goes past it, your app is going to take you out of this trade. Whatever brokerage you use, whatever app you use, whatever MetaTrader, whatever it is, once it hits the bottom of this red line, if you have a stop loss in place, and this is mapped out correctly, that's where your trade will close, which should be around 1% or 0.5%, whatever you trade. Now, if the trade goes up and comes up here, you're going to take profit. The trade will automatically close you out at this level. And you go home with 1.6R. Great. So, this is why we trade the higher low. Because you know the market exhausted. You know that the market's going up, or you think the market's going up, excuse me. And you're not expecting price to make another low. Because what would that mean? If price makes another low, that means that the trend is changing. That means that we're no longer in an uptrend. We're now in a downtrend. And how do you identify this? How do you identify this? Oh boy, hold on. Okay, how do you identify this? The way that you identify the market is changing behavior is by this level right here. Our higher low. So remember how I was talking about how it's very important to understand where the higher low is and what it is so that we know where to place our stop loss and so that we know that we can be confident in taking buys, not sells. In theory, if we're in an uptrend, price should always trade above this higher low area. That is why we place our stop loss below this area. Because price should never do this if we're going to continue upwards. Sometimes it happens, but rarely does this ever happen where price then skyrockets back up. I mean, whatever. It could have been news. Donald Trump made a tweet. I don't know. God knows what happened. But most of the time, what's going to happen is this market, once it breaks this structure and breaks this higher low, you're going to see it push down, create a new lower low, and then what happens? A lower high is formed. Once you form this lower high, and you could tell that it's respecting this level. Notice how this was our higher low, and now it turned into our lower high. It's respecting this level. So now, this uptrend, we cross that off. Because now we're in a downtrend. We have created a new lower low. We're respecting levels, previous levels, and creating lower highs. And this is where I start looking for trading opportunities. Once we've done this motion, do I start looking for trading opportunities? A ton of people want to get in up here and say, okay, let me get in up here because I'm anticipating the reversal and I can get a 1 to 15. A 1 to 15 RR, 15%. That's enough to pay my mortgage in a month on a $100,000 funded account. That's enough to get a Lamborghini in 2 years if I took 2 of these trades, which I'm really probable of doing. No. None of that. The reason you are a day trader, and the reason you do what you do, is to wait for confirmation. Not to anticipate things to happen before they actually start happening. Because that's the difference between what's going to make you profitable and what's going to lose you money in the markets. And so the reason why I say this now, why I wait for this motion to happen, is because then we're in a downtrend now, guys, right? When you're in a downtrend, what happens? Lower lows and lower highs are formed. So we just had that happen once. What I'm going to anticipate is another lower high or a continuation down. And look at that. Look at that. A lower high. A lower low. Or whatever, wherever price goes, whatever. Or sorry, wrong level. Lower low. There we go. Right. Okay. So now we're in a downtrend. Right? And the reason why I wait for this confirmation is because of this. We see a change in behavior right here. Right here, we notice that change in behavior. This line going down, or whatever you know, imagine these lines are the graph, right? The candlesticks. These are the candlesticks. This is how they're moving, and this is just the average of them. So this is how they're moving. They're somewhat moving up, down, up, down, up, down, but generally speaking, it's going up, and then it's going down, and it's going up, right? So here, this candle right here, or this candle, yeah, this candle right here, we can notice a behavioral change. We see price break beneath this higher low to then make a lower low, which will give us our lower high. But is that enough information? Just seeing up until this point right here. Is that enough information to say, okay, you know what? Price broke out. It created a lower low. It just made a lower high. I'm expecting a new lower low. Is this enough confirmation? I mean, for some it may be. For you it might work, and it might be perfect, and you take these trades all the time. And I wish you the best with that. And I would continue doing it if it works for you. But for me personally, I do not take these trades. Now, why do I not take these trades? Because something simple we call a breakout and a break back in. So depending on what time frame this is, and tons of other stuff that we're going to get into down the future, this is one of those things that I wait for additional confirmation. And the way I got that into my head, and what you guys have to say to yourself, is why not? Why not wait for additional confirmation? This isn't life or death. This right here isn't life or death. You don't need to take this trade right here. No one's telling you need to do this. There's no boss standing behind your back. There's going to be plenty of other opportunities to come after this one right here. So if you're the type of trader that's going to do this over and over and over and over again, most likely you will win. If you have proper trade management and your confluences across the board make sense and everything makes sense, this most likely will work. But I like being a high probability trader. And what that entitles is waiting for that additional confirmation. I wait for price to really break this lower low. Again, for the second time, this is when the candle broke, and then come back up to this level. And the first lesson that I'll leave you guys off with for the next time is break and retest. I'm sure you guys have heard of this. Probably seen it a million times somewhere. But that will be the end of our first lesson. And now, obviously, the same thing goes for lower highs. Just reverse everything I said here. I'm not even going to go into it. For buys. These were all sells, right? So that was an uptrend, no longer. Now, these were all sells. I was only looking to sell this market in a downtrend. And I was only looking to buy this market in an uptrend. But same thing applies. Just write HH instead of LH, and write HL instead of LL. Okay, yeah, you get the point. The market is going to be going up. Right. Okay, guys.